First of all, I want to say welcome to our first ever kind of speaker event about green investments. My name is Alex Robinson, for those who don't know me, and I am the communications coordinator for Green Goderich. Usually I'm a bit more behind the scenes, but today I'll be chairing our event. I hope everyone is staying safe and healthy at home and getting out in nature as much as possible, and hopefully not getting too much heat right now. If anyone joining us is new to Green Goderich, I'll let you know a little bit about us. So we're a grassroots organization. We advocate for the environment as well as educate the public on all things environmental, plastic pollution, climate change, all that sort of thing. You can check out our Facebook page and our website, greengoderich.com, for more information. So I will introduce a couple of other core members who are here with us tonight, because it's nice to see some familiar faces in times like these, I'm sure. So first up, I'll give Jim Hollingsworth the floor. So he is one of our co-chairs, and he is a retired family physician, and he has been in the Goderich community for many years and is a great steward to our natural environment. So we can say a couple words.
Well, hello everybody and welcome to this Green Goderich experiment. Special thanks to Alex for pulling this together and Marcus in the background, and also special thanks to Dean, our latest core member, who's put together what I believe is going to be an excellent program. So welcome.
Great, thanks Jim. And then next up I will have Betty, our other co-chair, say a couple words. So she is actually a retired college professor of health sciences. And she also does a lot of work with community food advisors with Huron County Public Health. She's a really amazing and kind person, a great resource to our group. So I'll let Betty say a couple words as well. Oh, I don't know if your audio is connected there, Betty. Just give us a wave. Perfect.
Can you hear Betty?
Looks like she can. All right, maybe we'll give her time at the end to say a couple words when she has it sorted out. And finally, our speaker for the evening, Dean Whalen. Dean is our general representative on the core team. He's been involved in a lot of community environmental action for many years. He is also a financial advisor who specialized in responsible investing and holds a sustainable investment professional certificate from Concordia University, along with many other degrees. So tonight he'll be speaking to us about what green or responsible investing actually is, why it is so important, and how to actually go about it with your own finances. So before I let Dean dive into the presentation, I just want to give a couple instructions on how best to kind of use Zoom during the presentation. So I have everyone muted to eliminate any background noise and general kind of riffraff. So if you would like to ask a question, just go to the bottom toolbar. There's a chat option. This allows you to send a message to the whole group. And Dean will address those questions. Most likely at the end, we can have kind of a Q&A at the end. So if everyone kind of just do a practice chat now, send a hello to the group, make sure everyone can figure that out. And maybe once we do get to more of the question and answer period, feel free to unmute yourself and we'll have a bit more of a discussion as a group. Okay. Good work, everyone. Oh, and one more thing, there will be a chance to win a prize during the evening. So Dean will let you know when that is as we go along, but I will show you the prize now. So we have a reusable Green Goderich tote bag here with our logo on it. A nice cotton tote bag. We also have our Green Goderich Town of Goderich. I drink Goderich tap water, reusable water bottle. And as well, we've made buttons. They say think green, act green. And they're actually made on seed paper. So you can take the actual pin off and plant the button itself in the ground and it will grow wildflowers. So those three items will come together as our prize. But otherwise, I will give it over to Dean.
Thank you, Alex, and thank you all for joining us. This is my first presentation ever on Zoom, so hopefully it'll go well. So at this point, the presentation will take approximately 45 minutes. I would encourage you, if you have questions, to use the chat option so that we don't lose the question and you don't, and that Alex will be keeping track of those, and we'll circle back to those at the latter part of the presentation, because I know we all have busy lives, so many places to go these days, joke, you know, but I don't want to keep you beyond our time. Okay, so I'm going to share my screen. How's that?
Perfect, looks good.
Okay, we're through the technical part of the program. So this is an introduction to responsible investing, prepared especially for you folks based on other presentations I've done, but I've customized it a little bit and brought it up to date, actually. You'll note that I have a Sustainable Investment Professional Certification. That's a program I completed through Concordia University about, I guess, 7 or 8 years ago now, and it really helped me to understand this whole idea of what is sustainable investing. So, of course, there's always a disclaimer. The information and materials in this presentation are for informational purpose only. They're not intended as investment, financial, or other advice. The information included in this document is not an offer to sell or promote any specific investment product. Every individual has specific financial needs, capabilities, and understanding. It is important for you to understand the risk characteristics of any asset prior to initiating any investment. So this is, the focus is on education here tonight. So a very simple overarching investing definition. An investment is an asset or item acquired with the goal of generating income or appreciation, sometimes called growth. In an economic sense, an investment is the purchase of goods that are not consumed today, but are used in the future to create wealth. In finance, an investment is a monetary asset purchased with the idea that the asset will provide income in the future or will later be sold at a higher price for a profit. What is responsible investing? Well, it uses the same financial principles as mainstream investing. However, it adds layers of analysis that traditionally are not necessary in a standard investment analysis, or at least they're not considered necessary. This graphic kind of illustrates what sustainable, responsible investing is trying to accomplish. And you can see there's 17 goals, and those were developed by the United Nations. And these goals have influenced a tremendous amount of international development and policy over the years, and they continue to allow us to reach towards improving society and to measure our success. And so the investments that we would call sustainable and responsible are oriented to generally help us achieve these goals. We've got a long way to go, certainly. Things have improved in some cases in the last 20, 30 years since these goals were first developed, but unfortunately some things have not improved. So we've got to keep focusing and doing what we can in our lives that can help improve this. So what is responsible investing? Tonight we call it green investing, and that's certainly one term that's used. Another one I've mentioned already, sustainable investing. Socially responsible investing is used quite a bit. Impact investing, you may have heard of that. That's a very focused type of investment, and we'll discuss each of these in a little bit more. ESG investing, I'll spend quite a bit more time on that. ESG stands for environmental, social, and governance. And microfinance is another way of reaching out and investing with people who generally can't have an investment. They don't have enough money to even have a cell phone, or sometimes not even a home. So the basics of ESG, it's environmental, social, and governance issues. So these issues have been around for a while, and they're drivers of change in the world. And so they're not just societal issues, they're important economic issues. And there's very significant implications for business and investors. So as pension funds and foundations and private investors try to align themselves and improve on these. So some examples of ESG issues in responsible investing. Climate change, of course, we've all heard of that. There's a broad consensus among governments that the world needs to transition to a low carbon economy. Of course, there's some exceptions to that. There's some governments that don't want to do that, but the majority of countries in the world definitely are working towards this. And responsible investors need to understand how the companies manage their exposure to climate-related risks and opportunities. There's different types of risk, and a lot of investing is quantifying risk and understanding it so that, you know, if your long-term investment or even short-term investment is going to grow, at least certainly preserve the capital. So there's physical risk, just, you know, storms, hurricanes, fires like in Australia last year, transition risk. Sometimes companies, you know, there's a lot of talk today about fossil fuels being at risk because the world is trying to decarbonize, and a lot of those assets could be stranded in the ground, which is probably not a bad thing. Liability risk. This refers to a scenario where a party is negatively affected by climate change, and they could seek compensation from those they hold responsible. We even have examples of children now suing governments for compromising their future health and well-being. Another issue is water scarcity. So that's more on the environmental side, but it also touches on the social side and even governance. Water is scarce. I mean, we're very fortunate, those of us who live on the Great Lakes here, Lake Huron, you know, it's hard to imagine water scarcity, but even some properties experience it here, and certainly water starts to become more scarce as you start to look at purity factors and so forth. So global population will amplify the need for power generation and food production. And it's an important issue because water-intensive industries such as mining and agriculture face significant financial risks. Again, being a rural agricultural community, we know how important that can be for the profitability and even survival of our farm businesses. Women in leadership, this is one, sometimes people think about this, sometimes they don't, but it's a very important issue. Women hold only 14% of all board seats of publicly traded companies in Canada, and about 40% of Canadian boards are all male. That's 100% males, no females. This is a problem, not just because it's an ethical problem, but it's also because companies with strong representation of women on their boards tend to outperform on a number of financial metrics. Okay, so there's been lots of research done on this, and it shows that companies with more women on their boards tend to outperform their competitors on a number of financial measures, including return on equity, return on sales, stock price growth, etc. So this is an important issue. Executive compensation. Well, if you read the headlines every few months, there's an article about how executive compensation is increasing, and that the top Canadian executives' pay is growing at a much faster rate than the wages paid to the average worker. The average Canadian CEO of the top 100, they earn 209 times more than the average worker. So within 2 days, they've achieved the earnings of a full year's salary for the average Canadian worker. So socially responsible funds are working with this, engaging with companies, trying to address the CEO pay scale and make sure that it does not harm the investors and harm the overall social relations. Community relations, free, prior, and informed consent. This is a principle that's been certainly promulgated through the United Nations and accepted by many governments. The British Columbia government has accepted this, and the Canadian government has said they wish to formalize it. And basically it means Indigenous people should be, consent should be obtained before the approval of any project affecting their lands or territories and other resources. Now, this obviously is not always honored. There's many stories even today where there's quite a bit of controversy in Canada, certainly, and around the world. Socially responsible funds will look closely at this. And it's especially important, usually in the resource sectors, to obtain and maintain the support of the local communities, Aboriginal or otherwise. Because if a project receives the necessary regulatory approval, the community opposition, even if it's not, I should say, if it's not approved, the community opposition has a potential to prevent a company's project from coming to fruition or be delayed at great cost to the company. So this is really important to pay attention to this. Supply chain. I don't know if you can see the photo here clearly in the background, but that's a photograph of the Rana Plaza garment factory in Bangladesh. In April 2013, you may recall the factory suddenly collapsed, resulting in the loss of more than 1,100 lives. A terrible tragedy, and what makes it even worse is that it could have been prevented. It really shouldn't have been allowed to operate, but many leading global and Canadian companies and Canadian brands weren't monitoring the health and safety of their supply chains. And as a result, they were buying product that was being manufactured here without trying to care for the workers who are manufacturing it. So there's been some massive changes due to that, but it's still an ongoing problem. And also supply chains during COVID-19 have become quite an issue and will continue to be as this pandemic continues. So it's important for companies to understand how this is operating. Responsible investing is becoming mainstream. I've been involved in this since the late 1990s, and we were hardly on the scale back then. I don't really remember the numbers, maybe less than 200 billion, which is a lot of money, by the way, but not anywhere near what the Canadian investment amounts are. Now in 2017, you can see the annual increases, and now it's over $2 trillion. It's huge and still growing very quickly. A lot of this growth has been from pension funds, has been from foundations, endowments, high net worth individuals. The average investor who I'm likely speaking to at this point, we represent a smaller percentage of this total, but even that percentage is growing quite significantly. How does responsible, well, let me go back to there. Part of the reason for this is the pension funds are responsible to their members. And those various risks that I just outlined above, if they can't show their members that they've been trying to mitigate those risks, that they understand those risks, then they can have some very severe legal issues, not just moral and ethical issues. How does responsible investment work? There's no one size that fits all. So some companies do thematic investing. And so if you're thinking of green investing, that's generally where it would fit. And you can kind of see here themes like clean technology, alternative energy, women in leadership. Those are themes. And so the investment portfolios will be constructed around that. They can also, and many of these will, use the environmental, social, and governance integration. And governance, if I didn't explain it well, it has to do with how a company is operated, how the board functions, how the senior management functions, how they govern the company and their relationships to their customers, their communities, etc. And so this environmental, social, and governance data allows the managers to see how well the various companies are performing in this metric. And this is becoming more widespread now in regulated investments. It's being demanded by boards to do this. Shareholder engagement on the left side, that's another one. Not all responsible funds do this, but many do. Basically, they have meetings with the boards of these companies, the senior executives of these companies. They go to the shareholder meetings, they file resolutions, they vote. They can very directly impact company strategy and response. So that's another important one. How do they work? Well, there's negative screening, positive screening, and impact investing. So negative screening is really where the whole industry started, and it excludes certain industries from a portfolio, such as certainly tobacco and weapons manufacturers are generally excluded from socially responsible investment funds. Now it's progressed now, and positive screening is used quite a bit more. And it's the inclusion of certain companies into a portfolio based on the positive ESG performance compared to their industry peers. So in other words, there might, there's lots of banks out there in the world, but some banks maybe have more responsible ESG, stricter ESG protocols in their lending, etc. And they would tend to, be favored for investment as opposed to those that don't. Impact investing, this is growing quite a bit, and we're seeing quite a bit of innovation here. The average investor does not get involved in this directly, but certainly pension funds do, and governments, etc. And that's investing for social and environmental impact as well as a financial return. And sometimes the investments will take a lower return in order to create these improvements, and sometimes they will just get the return of another investment that didn't particularly have those. And so these would be things like microfinance, affordable housing, healthcare, education, renewable energy, and community development, and many more. So if these look familiar, it's because they were taken from that previous slide I showed you. These are the one of the companies that I'm familiar with. They've said, okay, we're going to engage with the companies. And so in 2020, we have decided that 5 sustainable development goals that most directly inform our engagement theme. So when they're talking with the management of the companies, with the boards of the companies, they're going to focus on these areas. They're going to say, what are you doing? What improvements have you made? What programs are you following? What hiring practices, etc.? Or are you falling back and not performing as well? So they're measuring these and encouraging companies to improve these. The benefits of responsible investment. Well, it can improve risk management. There's lots of studies these days, and the investment category has been around long enough that they can, do 20-year comparisons and more. And responsible investing can reduce risk. It can also enhance long-term financial performance. That was for a long time used as a reason why not. But apparently, certainly scientifically, statistically, you can prove that, in fact, long-term performance to date has actually been better in the socially responsible funds. And it also contributes to positive societal change, which was probably the original reason why most people started investing in this area. So you can't have a financial discussion without looking at numbers. That's just the way it is. So what this graph means is it's a measurement of a socially responsible index. So an environmental, social, and governance leaders index. Compared to just the same size of companies in Canada, but it would include these ones plus the others that aren't leaders in environmental, social, and governments that have more problems or pay less attention. And so they've measured these since September 2007 to just March of this year. And you can kind of see the blue line is the ESG Leaders Fund, and the orange one is the Canadian overall corporate members without the ESG filter. And you can kind of see that the companies in the blue are included in the orange, But a lot of the companies that are in the orange are not in the blue. And you can kind of see, they follow a very similar trajectory, even to this point where markets were really stumbled due to the COVID-19. They're rebounded somewhat, but they've got a long way to go to get back to where they were at the top at the beginning of this year. So this is just a Canadian look at it. And this fund is just one fund of many funds. And I just thought it was an interesting slide. Investor perspectives. The Responsible Investment Association of Canada, which I'm a member, have been for many years, they do surveys regularly. And they asked Canadian investors, how interested are they in responsible investments? And there was a bit of education to go with that, but 77% of investors said they're somewhat or very interested in responsible investing. 82% of investors said they would like to dedicate a portion of their portfolio to responsible investments. And 77% agree that companies with good environmental, social, and governance practices are better long-term investments. So as you can see, the average consumer of financial products in Canada certainly agrees that they would like to see their money invested, at least a substantial part of it, in socially responsible ways. Okay, so here comes the contest part, folks. So have a look at these. And so we're going to have, I don't know how, Alex is going to decide who the winner is, because I would like you to look at these two portfolios. One is considered and classed as a socially responsible portfolio, and the other isn't. And the point of this is you'll notice they're very similar, but not the same. There's probably half the companies are the same on both of them. And these are the top 10 holdings. And typically a portfolio might have 40 to 60 companies. So which one do you think is the socially responsible, represents the socially responsible fund? These are Canadian equities. And which one do you think is not? So if you think the one on the left is the socially responsible fund, you kind of send that in the chat to Alex. And if you think the one on the right is the socially responsible fund, you share that, or say, the one on the right in your chat. Okay, Alex, and can you give me a little heads up here when I should go to the next slide?
Yeah, so we have both Krista and Danielle are saying the one on the right. Krista was the first one though, so if it's correct, maybe she will get the prize, but you can move on.
Yeah, there's going to be two answers to get the prize.
Okay. We're just saying left now.
Okay. So shall I go to the next slide? The next slide's going to tell you which one it is.
Greg says neither one is.
Well, that is an interesting point, because you'll notice how similar they are. Like it's not easy to tell. So yeah. And again, I just chose two that would be fairly easy to compare. But they're both Canadian equities. They're both large cap Canadian companies. Okay, are we ready to move to the next slide?
Yeah, let's see it.
It was the one on the left.
The one on the left. So then Janet was the first one to say the one on the left.
Okay, well, she's going to have to answer again. There's another slide coming up. This could make your job complicated, Alex. Okay.
Handle it.
Yeah, so there's a little more data I included on this one. And so this is a socially responsible Canadian equity fund, and it just kind of shows you the total percentage in the portfolio. So the Loblaw company represents 4.25% of that portfolio. And this is when they first bought that stock. You can see they don't trade it that often. And then the Bank of Nova Scotia at the very bottom, 3.55, but they've held it since 2002. Okay. Okay, so now I thought, well, let's look at the global portfolios, global equities, because Canada really just represents about 3% or so of the global stock market. So these are two what are classified as global equity funds. And one of them is considered socially responsible, certainly classed that way, and the other one isn't. So Alex, just let me know when to move on to the next one. So basically, if somebody can get 2 out of 2, they'll win if nobody else does. And if more than one gets 2 out of 2, then we'll let Alex figure that out. But I guess the point is, you look at it and it's not immediately obvious. And so the determining of whether a company satisfies the criteria, it requires a lot of work, a lot of effort, and there are companies that's all they do. In fact, one of the world leaders in this company originally started in London, Ontario by a man named Michael Jancy, great guy, and he's now one of the biggest, his company out of Toronto is one of the biggest companies in the world in analyzing sustainable corporations. Okay, are we ready to move?
Yeah, let's do it.
Okay, that was the one on the right. Okay, and one thing that just jumped out at me here when I was looking at this was Amazon, right? Because they're getting a lot of flack these days because of their pay and their warehousing, etc. And so they're in there. So you'd have to dig deep into that and to find out why would they be included, for example, in that portfolio. Okay, because it's more than just like there's about 13 different metrics that they use to determine their inclusion. Okay, okay, shall we move? Okay, so ways to invest. I'm going to limit the following slides to describe investments that are approved by the Ontario Securities Commission. There are many other types of investments. When you go to your bank or your credit union, or you go to a brokerage or an independent advisor, they're all governed by the Ontario Securities Commission. And so that's why I want to focus on those types of investments. Other investments do not offer the same level of public disclosure, therefore they would be considered higher risk. And I'm not going to really spend much time talking about that. So ways to invest. This is primarily public stock companies. You can open a brokerage account. Certainly direct self-managed accounts are available. All the major banks and credit unions, and just online accounts. You can go online and sign up to open up your own account. Or then there's the other more traditional advised brokerage account. So that's where you actually have a stockbroker or a team that advises you. And generally, I would say those are designed for clients with higher net worths. The absolute minimum to really get any kind of service at all, and I'm saying it's an absolute minimum, would be like a $500,000 investment. So the majority of folks that I'd be talking to would be in the direct self-managed accounts. Open a mutual fund account. Well, you can do that through a financial institution or an independent investment advisor. And I've got a little asterisk here. And I recommend those for non-sophisticated investors. So in other words, if your head's even spinning a little bit about what we've been talking about here, and the idea of going out and buying individual stocks and bonds and things is just not possible for you, then a mutual fund account will solve a lot of those problems for you. But anyway, that's the 2 ways you can access this market. Before you open an account, ask, does the company have sufficient expertise and options to match the portfolio to your particular values and needs? Because not everybody has the same objectives here. Some people want to make sure that, well, for example, the women in leadership, if you want to make that a part of your investment portfolio, well, there's only a couple of funds available in the country that will satisfy that. At the same time, if you want a socially responsible Canadian equity fund like the one that I showed, well, every of the companies that provide socially responsible funds, they all have their version of that. But you want to find out, do your values match what they offer? And then a really important question is, how do they view SRI investment? Do their investment managers have a process to integrate ESG concerns into their portfolios? So if you ask that question either in person with an advisor or online with a company that has online direct accounts, if you don't get any information, if you get a blank look or no information, well, that pretty much gives you the answer. Because really there's, I think you'd have more luck online than you would from advisors. Or you go to the Responsible Investment Association of Canada and find an advisor. Because not many advisors, something like 85% really don't know much about that field at all. References, I've referred to a few different items here, and there's two sources. The Responsible Investment Association of Canada, that's their link there. And then the Morningstar Canada Mutual Fund information. There's a tremendous amount of information at both of these sites. I would encourage you to use those. And certainly I mentioned to Alex, I'd be happy to provide a copy of this presentation to people that might want to, kind of review it for later use. But certainly if you start at these two links, you'll be busy for a week or two at least before you need to find anything else, actually. So I thought I would just kind of wind up with a bit of an inspirational note. The business of business should not be about money. This is a quote from a famous person, a famous business person. It should be about responsibility. It should be about public good, not private greed. So actually, does anybody out there know who said that? If so, they might clinch the prize depending on how they answered the other two. Any comments, Alex, on that?
No, no one seems to know.
Okay, well, here it is. It's Anita Roddick. Unfortunately, she's passed away. She's the founder of The Body Shop. And I think most people, even males like myself, have heard of The Body Shop. They're a cosmetics company producing and retailing natural beauty products. And she was a very influential woman in business and in social responsibility. And unfortunately, she died. She did sell her business to a large multinational corporation, but only after her health was deteriorating due to complications from hepatitis C, and she left her fortune to charity. Very inspiring person. Okay, so now we open it up to questions. And yeah, I'll just change my screen here. Okay, stop share. Okay, I've stopped sharing. Okay, so does anybody have any specific questions or concerns? And remember, I'm not giving investment advice. I'm just commenting on, what is socially responsible investing.
There was one question from Brenda in the chat.
Mm-hmm.
She says, I've been retired for almost 5 years, and at that time we did not have an SRI fund. Do the mutual fund companies via banks have them now?
RBC, I know, has some, and they've had them for several years. BMO has a couple of funds now. And I don't keep track of them. I think those are the only two banks that have. I know TD doesn't. I think those are the only two right now that have them. I know the credit unions are very involved in that. Also all the credit unions are accessible through all the local credit unions. Okay. Any other questions? Oh, and I should say, I did mention there about high net worth investors, et cetera. Like, if this interests you, you can go online and you can open an account for probably as small as low as $5,000, maybe even less. and there is products out there that are suitable, and so you don't have to be wealthy to use these types of funds, but certainly you go online and you can find a platform that will allow you to invest directly for an amount that maybe a regular broker or advisor wouldn't open an account because they just couldn't handle the small size of it.
There's another question in the chat from Janet. She says, I see CoPower on my Facebook feed. Is it a good place to invest?
Well, unfortunately, that's the kind of, I can't answer that. That's not the purpose of this discussion to advise on any specific product. What I will say is it's an alternative investment, and you can go online to their website and they have lots of good information there. And so you would probably find it hard to, there may be some advisors that will deal with it specifically, but as far as I'm aware, it's larger investments, it's considered an exempt market product, but they do have a small version, like a guaranteed investment, which is kind of like a GIC. So I say go online, check it out, and yeah. Anything else? Okay. I'm available if you want to share any information. If you have any questions, specific questions, there's my email down there, dwhalen@lighthousemoney.ca. I'm not advising on investments any longer. I'm semi-retired, I'll call it. I'm not keeping up to date on the day-to-day market changes and fluctuations, but I'm still a member of the Responsible Investment Association of Canada, and I'm still very interested in it. And so if you have any kind of questions that you want to ask in general, and if you ask me about CoPower, I might send you the link. That's about it. I really am not giving that kind of specific advice any longer, but I'm more than happy to talk about the world of responsible investing. Yeah.
Can I just say something? Can you hear me?
Sure.
Yeah.
That's too bad you can hear me. But would you agree to a certain degree? Because that quote that you just had from that woman from the body shop. I always, the first time I heard the quote "tragedy of commons" was from Warren Robinson writing a play about Kingsbridge, and then later on, Dr. Dawson talked about that. Do you think that's part of the problem with investing too? Is that people are looking for, it's a tragedy of the commons, that whether we like it or not, people are looking for a better return. Therefore, they do not necessarily buy stocks that are socially responsible.
Well, that's an impression that people have. As I mentioned earlier, there's been a lot of work done on this, and there has been no advantage shown to buying non-responsible stocks, let's put it that way. Socially responsible investing has shown to create higher returns at lower risk over longer periods of time. So it really depends what an investor is looking for. Yeah.
Okay, good.
Yeah. Okay. So if there's no other questions, like I said, you can always reach me by email. Alex, have you figured out who might have won our wonderful door prizes?
Yes, it went back and forth a bit, but it is Krista who has won it. So I'll drop off the prize at her house this week.
Wonderful. Great. Where are you going to plant the button?
What's the button? I missed the prize explanation, really.
Oh, I love the button.
Bottle, a bag, and
yeah. So we have these new buttons. They are made out of seed paper. So after you're done using it, you can remove the clip and plant the actual paper, and then it grows wildflowers.
Oh, my backyard for sure.
Isn't that great?
I thought it would be my backyard.
You can get a button too. Maybe give them 2 buttons.
I can divide it up and plant it in all your backyards.
True. Okay.
Dean,
Well, I
it
want to thank
seems-
everybody for taking their time and participating in this. It was lots of fun. I certainly appreciated doing it. And yeah, good luck and keep safe and keep well.
Can I
Well
slip
done,
one more
Dean.
question in? It seems the bar's awfully low there if Amazon is in it.
Well, you know, that's what I say. If you really want to get into it, you got to really delve into these funds. And I wanted to show that specifically because I could have chosen another fund that you wouldn't have recognized half the companies, right? If you might not recognize any of them. So I wanted to show that, you know, just because it calls itself responsible, certainly it's more responsible than a fund that does none of this analysis. But, you know, it's certainly not going to give you something like a large cap Canadian equity fund. There's only so many companies out there. Or in that case, that's an American. Oh, no, that was the global fund. Yeah. And so there's lots more choice, but I chose 2 funds that would kind of concentrate on the larger cap companies, the larger scale companies. And so Amazon, for whatever reason, I'm not familiar with that particular reason why that manager chose Amazon, but some people in my past experience, I've had people look and say, well, there's Amazon in that portfolio. I don't want it. It's just quite simple, right? And so that's important. You know, that's important. If it means that much to a person, then they should have that choice.
So follow-up question then, are there other products with a higher bar?
There's different bars like there's some companies that have very, what I would call low bar. I mean, it's still better than no bar, you know, but it's a lot easier to go over. There might be 4,000 companies that qualify. And then there's other companies that have more criteria, more stringent criteria. And instead of having 4,000 companies qualify, they might only have 700, you know. So yes, but you really have to kind of fine tune it and get in there. And you have to also need to be aware of your level of risk that you're willing to take, because those bigger, larger companies are often seen to be less risky, not because they're not risky, but they're kind of too big to fail. You've heard that before. And also they're easy to buy and sell. Everybody's always looking for them. So in a portfolio, the ability to buy and sell a stock is considered important for short-term type investing. And as much as we like to call ourselves long-term investors, I find many people actually have a kind of a short-term mentality. And so the managers have to be able to sell their stocks very quickly sometimes. And so if you have a smaller, less well-known company in the portfolio, there might be nobody wants that stock when you want to sell it. So that's another factor.
Thanks, Dean.
Yeah. Okay. All right. Super.
I have a question, Dean.
Oh, sure. Okay.
Are there any portfolios that would, say, include local businesses? And is that a possibility at all?
And it's becoming more of a possibility. But in Huron County, I'm not familiar with any fund that's, you know, other than private businesses, you know, you have to invest in a local business directly. I mean, there are companies like, you know, the Business Development Bank, the credit unions will finance local ventures, community futures groups, but they're not you can't invest in them the way you would these funds, because they're not really designed to create a profit. You know, now, having said that, the credit union did briefly, it was I think one of them in Kitchener, they've got several branches. Can't remember the name just offhand. They actually offered like a GIC. It was very much like a GIC, and it was designed for community projects like affordable housing and so forth. but it was very limited in subscription, like size. They could only handle, I'm going to say $15 million or something. And so it sold out fairly quickly. So, you know, so there's a lot of work being done on that, Karen. But there's not a lot of what I would say options at this time, unless you're willing to take a lot of risk with a fund that's just not got a public prospectus or anything like that.
Thank you, Dean.
You're welcome. Okay, so the local investment, I think there's tremendous work can be done there. I would really love to see our government get behind those initiatives. You know, if you look at the way capital is organized, you know, it makes it very easy for individuals such as myself and my clients to invest in large public stock companies, right? That's the way the system was designed. When it gets down to investing in smaller, more local enterprises with any degree of safety and security, it's a much different ball game. And I would love to see our governments, you know, somehow stand up and support local initiative-based investing and make it more less risky for people, you know, through guarantees. It would be I think, a wonderful thing, and I think people would be more than happy to invest 5 or 10% of their savings in something like that if they felt that there was a good possibility that their investment would be returned with some interest. Yeah, but it's unfortunately, it's just not happening. Okay, it's almost 8. Okay, well, thank you all very much. I'd like to say good night. Has Betty got anything to say? Are you able to talk now, Betty? Apparently not.
Right? Okay. Thanks everyone for joining us tonight. I'm Betty Durst and I'm co-chair of Green Goderich. And I am really appreciative that you took the time to join us and on a beautiful evening during the pandemic. At Green Goderich, our goal is to promote education so that we can make decisions as a community that support the environment. And sustainable investment is certainly a way to go to do that. So I really appreciate your excellent presentation, Dean, and I wish everyone well. And let's keep learning together and stay healthy and hope to see you soon. Bye.
Thank you.
Anything else, Alex?
No, that's it. Thanks so much, Dean. That was a great evening.
Thank you.
Okay.